Oh, I hope you guys doing fine. I hope you're doing wonderful. This is a gold brief. I'm trying to be an open-minded and try to get bullish for gold. Yet I'm very cautious. I believe that gold is in seller's zone right now. I'm gonna start with the fact that there's a possibility that the gold can decouple from dollar and couple with TLT, which is the bond market, like what happened in June 2019. So I'm going to work with this assumption because the dollar now is at buyer's zone. So I'm going to work with the assumption they're going to be decoupled. Okay. So I have to analyze TLT first. So let's look at the seller zone in TLT. TLT, it did close above the Bollinger Band yet. It got back in. Usually the least target is a 10-day moving average. Yet the idea is to go to the mean reversion, which is the 20-day moving average, which will debunk this pattern. So it would be a false breakout if this happens. We would have to work with different pattern. Yet it will not be an inverted head and shoulder. Okay, good deal. So we started with TLT in this manner. Let's talk about Fibonacci extension targets for TLT. Good deal. So if we assume this is A, B, which is this very one right here. So this is A, B, and this is C. So C would be 162 Fibonacci extension of A, B, C, which usually create volatility afterwards. So again, if this is A, B, C is 162 Fibonacci extension from this point to this point to this point. Usually this will create volatility. So what happened? You had a quasi bearish candle and you had another bearish candle, which you gather evidence against TLT now, which we might go down. Yet the bias with the buyers right now. Okay. Yet, as I said, it's outside the Bollinger Band, mean reversion. ABC wants to 62, so it's seller's zone. So it's not very advised to buy at this level. Let's talk about gold. All right, so gold is the same. And let's assume this is the same. So you closed outside the Bollinger Band. So you assume the mean reversion to the 10-day moving average or 20-day moving average. This Bollinger is for the 20-day moving average, which assumes at least 1740 by the time it goes there, which debunked the double bottom formation. Okay, we might have another bullish action later, but for that one, if we go to mean reversion, this debunks this formation. And we have a high in the price action and a higher high. In stochastic, we had a high and lower high, which is not very bullish. So in this picture, it's the same as TLT, Bollinger Band, mean reversion. Usually, sometimes the Bollinger Band will not offer resistance. It's just an idea. It's a statistical quantitative method type of stuff. So 95% of the times, the price action would be within the Bollinger Band. So we might have 5% of the time to go up, but we don't know the future. So another thing, we sold at seller's area, which is the high of this day, which was 1784. So let's look at the Fibonacci extension. So this is A, B, and this is C. Let's see what C is. So, okay. So assuming this is A, this is B, and this is C. C is 138 Fibonacci extension. It's a seller's area, but the most solid one would be the 162, which is 18,803. but this one is a seller's zone too, but this one is the more solid one. So another assumption with Fibonacci extension with gold. Let's assume this is A, this is B, and the breakout. So we have a breakout of this pattern, and we have a breakout of this bullish quasi wedge. Call it triangle, symmetrical triangle. So let's put this as A, B, C. Okay. So we're not gonna do A, B, C. We're gonna do A, B, C. Okay, so ABC, the small one, will give us 162 Fibonacci extension, which always provide, most of the times, we don't know the future, provide volatility. So, okay, again, ABC seller zone, ABC seller zone, Bollinger Band, mean reversion, negative divergence. Okay. Yeah, I really want to believe in this rally. So I'm gonna give it time and see if it proves itself, and after that I will believe in it, assuming the decoupling from the dollar and coupling with TLT for gold. Let's look at GDX. GDX is the same thing. Yeah, you closed outside the Bollinger Band with a very bearish candle, and that's it. There is no, and also a price memory, but there is no reversal yet. You need confirmation. So let's look at Fibonacci extension numbers for GDX. So we almost got a 162, assuming A, B, C, 162 Fibonacci extension. We're shy, $3 shy of the Fibonacci extension, the high of actually 10 cents. Sorry, I said $3. 10 cents, 13 cents. So A, B, C, 162. Okay, so that's not bullish. Seller's zone, bearish candle waiting for confirmation, Bollinger Band, and in conclusion, I want to believe in this rally, yet I need more evidence. I'm assuming that the dollar is decoupling from gold, yet we might have the opposite. We don't know. So we're assuming decoupling for the dollar, coupling for TLT and GLD or gold. Please like if you like, subscribe and share, and remember, disco is forever.